Joining us now is Scott Wren of Wells Fargo Investment Institute and Dana D'Auria of Envestnet. Guys, welcome. Dana, we got a big week of earnings this week, but also a big week of data. At this point, which do you expect to give you more insight into how to position, the micro or the macro?
Well, I certainly think from an earnings report perspective, anyone who's willing to actually do a forecast, that's going to be pretty illustrative, right? I think a lot of these corporate planners are not going to want to give forecasts because, of course, the landscape can change literally as they're speaking. But to the extent, if you're looking at what happened in Q1, we all know that's kind of old news. It reflects probably pull forward. It reflects a totally different dynamic. So it's really about how much forecast information. On the macro front, of course, if we see jobs come in and continue to be strong, it's going to be difficult to expect the Fed to be lowering rates anytime soon. And notwithstanding, the TIF, obviously with the Trump administration, I don't expect May. June is, something of a toss-up. So I think, it really depends on what we hear out of the earnings landscape coming this week.
Scott, it feels to me like we went from a market plunge on high tariffs and this isn't a negotiation message to the market rebounding on this level of China tariffs isn't sustainable, and we have hundreds of negotiations in progress. Between these extremes, have you been able to sift out any truths worth banking on?
Well, John, I think, we've obviously had a decent bounce off these recent lows. And so what we've been trying to do and talk to our clients about, and this is difficult for retail clients, is, they have cash in their accounts. They want to buy stocks with it. They've been hesitant to get in. And, when stocks are down 10 or 20%, you want to act on that. So, in our opinion, you're going to see some better economic growth, not only from the U.S., but probably abroad in the second half of this year. And so really, we've been looking for cyclical exposure. We like industrials, we like energy, we like communication services, we like technology. And on the up days, those are the sectors that outperform, and on the down days, it's all staples and healthcare and a bunch of defensive. So what we're trying to do is try to get a fix on what the economic outlook's going to be. Dana's right. Earnings, that's what happened in the past. You'd like to think you'd get some decent guidance, and certainly our individual company analysts think that some of these companies are going to give us some good guidance. But overall, just these calls, it's like the word cautious or caution or uncertain. Those are going to be used hundreds, if not thousands of times here over this earnings season. And so I think you have to look ahead, try to figure out what the macro environment's going to be. We think it's going to be more cyclical as we move through the second half of the year and in 2026, and position for that.
Okay.